Then coming to that of the levels in which the currencies are expected to swing this week, Euro could come down to 1.1150 level and then start gaining the level. So already they have made that slide slowly, and suddenly they will try to bring down more levels in the case of Euro and gain more in the case of GBP, and that they will do it mainly in order to drop Euro GBP cross. So they will be handling, last week I was telling you that they have been handling the N crosses, and this week again they will try to handle the crosses initially and later on come to the other majors. So during the prime European crosses are expected to be handled aggressively. So GBP could come down to 1.3225, but they came down yesterday up to 1.3337, started gaining the levels to 1.33 and went up to, they are expected to gain the levels in the case of GBP 1.3550. And in the case of Yen, again, they came down from 102.67 to 101.42. Yesterday they made the drop, and today also they made the drop to start with. Started gaining the levels, and they are expected to come down closer to that of 101 again during that of the European session or the early US session, and start gaining the level. So during the European session, they are expected to make the slide in the case of Euro and GBP. At that time, they could make downward move in the case of USD yen. As you see that they are showing a nominal positive net change in the case of Euro GBP as well as USD yen, just to pretend as if the yen crosses are going to gain, and suddenly during the European session, they will try to drop Euro GBP and also USD yen and bring down the yen crosses. In that process, they will drop more in the case of Euro when compared to GBP. As a result, Euro GBP cross will also be handled. So keep in mind that they handle the majors, and that influences their respective crosses. Then in the case of CHF, they could come down to 0.97 and start gaining the levels again to 0.99 area. Then in the case of Canadian dollar, they could come down to 1.2850, and they came down to 1.3030 level so far, and they are likely to come down after they formed 1.3124 as a high yesterday. Then in the case of Australian dollar, they set the low around 0.7500 as 0.7494, and they are expected to make a lesser dip now, and when Euro and GBP are making a dip, and then subsequently they are expected to gain the level. And in the process, you know that now they are handling Aussie crosses, showing negative net change in the case of Aussie and positive net change in the case of Euro and GBP. As a result, Euro Aussie and GBP Aussie are expected to show positive net change, and suddenly they will make the drop in them, Euro and GBP, and gain the levels in the case of Aussie and simply reverse the cross. So follow it carefully, understand how they are handling the respective currencies, majors and the crosses with the help of the net changes on the live market quote page. So this we need to recognize and act smartly so that you will be able to continuously identify the right type of currency and earn from the other market. So studying the live market quote page is an art, and you need to learn it fully. Then you will find it is much easier to follow a single tool of live market quote page, so that tick by tick move you can just watch at ease without much of a constraint. And see, a figurative expression of that is the chart. So in a figurative expressions, you might ignore certain facts, like when they make a quick up and down move near that of the high as a stop, and the chart study will say it is nothing but a noise, but actually that is how the players make the moves in the market. So you need to understand how the players tactfully handle the positions and also how they are trapping the traders, so that once you know it, you will be able to avoid getting trapped again and again. See, normally what happens when you commit a mistake, we learn out of the mistake, and then subsequently, when a situation arises similar to the condition what we experienced, we avoid committing the mistake. And that is a normal human tendency, that is learning out of mistakes. And that also seen in the case of animals, animal behavior. There again, they learn out of the mistakes. But unfortunately, we learn out of the mistakes, several mistakes, and continue to commit the same mistakes by without going for a self-reflection. Okay, every time I'm using the technical and fundamental analysis, and I'm not in a position to make a real headway. Why? People don't question it, and they find there is no alternative. And also they think that somebody has to identify a tool, somebody has to develop a tool, somebody has to go in for a new statistical calculations, then let us follow. That is how they develop the mindset. But the inquisitiveness is the most important thing. It is not that the degree which is going to give the inquisitiveness for a person to do a postdoctoral work or something like that. And it is a question of urge to explore. So once you have the real urge to find out what could be the appropriate solution for me to make consistent profit from the market, there is no qualification needed. You can do the objective study of all the mistakes what you have committed and relate it to the what were the fundamentals and the technicals you followed, how exactly you made, you perceived that as the right trade, and later on it happened to be a wrong trade, and where exactly it has gone wrong. If you study it, then probably you will be able to understand well the players create the market sentiment for the technical followers, and then later on use the fundamentals to trap them, make an unexpected move. So when you are not aware of such unexpected moves, when you are not prepared for such unexpected moves, then you get trapped. If you are prepared for it, what you will do is you will use the stop to limit the risk. But unfortunately, what happens when you use stops and subsequently when they hit the stops for 3-4 times, then you become demoralized because the equity erodes and your position carrying capacity comes down. In such a situation, immediately you widen the stop. That is a normal instinct of any human. So widen the stop. Once they hit such widened stops, then you find the equity is eroding in a bigger way. Then again and again, you say that, no, I have blown up 2 accounts, I have blown up 3 accounts, I have blown up 4 accounts and things like that. And you simply put the blame on others without understanding that you are not reflected on the mistakes what you have committed. So keep in mind that reflecting on the mistakes will really make you to progress in your trading, rather than if you try to point your fingers towards others, automatically you fail to realize your mistakes.